Hello students, admission of a partner lecture 14 problem number 12. In present video I am going to explain about 12th problem from admission of a partner topic. I am taking this question from Telangana State Telugu Academy Inter-Second Year Accountancy textbook. But this video is useful to all commerce students who want to know about admission of a partner topic. Previous lectures videos links are available in the description box. Even this question is also available in the description box. Let us see the question first. A and B are partners sharing profits and losses in the ratio of 3:2 respectively. Their balance sheet as on 31st March 2020 was as follows. In balance sheet, come to liability side, trade creditors 15,000 rupees. Bills payable 30,000, general reserve 20,000, profit and loss account 10,000, capitals of A and B are 60,000 rupees and 40,000 rupees. Come to asset side, goodwill 10,000 rupees. New point is, in old balance sheet under asset side, goodwill amount is given. Buildings 30,000 rupees, plant and machinery 50,000, stock 20,000, debtors 40,000, cash at bank 25,000 rupees. Two sets totals are 1,75,000 rupees. Come to additional information. Mr. C was admitted. By seeing this word, we should understand that this is admission problem. Here A and B are known as old partners. C is known as new partner. Admitted into business on the above date for 1/5 profit in the business on the following terms. A. C should bring 60,000 rupees as capital. B. Goodwill of the firm valued at 40,000 rupees. C. Plant and machinery to be depreciated by 5%. D. Create a provision for bad debts at the rate of 5% on debtors. E. Buildings valued at 40,000 rupees. What he is asking us to prepare? Give journal entries and opening balance sheet of A, B and C. In question he is asking us to prepare journal entries, but we don't prepare journal for this problem because this is revaluation method of goodwill adjustment. Observe these two bits. A bit, C should bring 60,000 rupees as capital. New partner is bringing capital. B bit, goodwill of the firm valued at 40,000 rupees. Means new partner is not bringing goodwill. Goodwill is valued in the firm. Goodwill is created in the firm. Means goodwill is to be adjusted under revaluation method. In my previous videos under revaluation method of goodwill adjustment, how to write the journal entries, clearly I explain. If you want to know the journal entries, then you can refer those videos. In public examination, 99% he doesn't ask journal entries. So you should able to do directly the ledger accounts and a new balance sheet without the help of journal entries. In present problem, we are not going to write the journal entries. Directly ledger accounts and new balance sheet we are going to prepare. Under ledger, we prepare revaluation account. Next, capital accounts of A, B and C. Next, come to asset side. Cash at bank means bank balance is given in the question and cash balance is not given. Therefore, bank account we prepare. After bank account, goodwill account we prepare. With this, ledger will be completed. Next, we prepare new balance sheet. Balance sheet of A, B and C. Let us start the solution with ledger first account, revaluation account. Revaluation account is a nominal account. What is nominal account rule? Debit all expenses and losses, credit all incomes and gains, profits. When loss comes in revaluation of assets and liabilities, if asset value decreases or if liability value increases, it is a loss. It should be debited to revaluation account. When profit comes in revaluation of assets and liabilities, if asset value increases or liability value decreases, it is a profit. It should be credited to revaluation account.
C, D, E. These three bits are related with revaluation account. C bit, plant and machinery to be depreciated by 5%. In old balance sheet, plant and machinery value is given as 50,000 rupees.
In old balance sheet, plant and machinery value is given as 50,000 rupees. And in revaluation of this asset, old partners came to know that its market value is reduced by 5%. Plant and machinery is one asset. Asset value is decreasing. It is a loss. It should be debited to revaluation account. 2. Plant and machinery account. Show the calculation here. Plant and machinery value 50,000. Market value is reduced by 5%. 2,500 rupees.
Debit. Create a provision for bad debts at the rate of 5% on debtors. In old balance sheet, debtors value is given as 40,000 rupees.
Debtors value in old balance sheet is 40,000 rupees. And old partners want to provide 5% provision on this debtors. Debtor is an asset. And provision for bad debt we deduct from debtors. Means asset value is reducing. So we have to debit this amount. 2. Provision for bad debt account. Debtors value 40,000. On that 5% PBD we have to provide 2,000 rupees.
EBIT. Buildings valued at 40,000. In old balance sheet, building value is given as 30,000 rupees.
In old balance sheet, building value is given as 30,000 rupees. At the time of admission, old partners revalued this building. They came to know that market price of this building is 40,000 rupees. Building is an asset. Asset value is increased by 10,000 rupees. It is a profit. It should be credited to revaluation account. By buildings account, market value 40,000 rupees minus old balance sheet value 30,000 rupees. 10,000 is profit. So we have taken all profits and losses in revaluation of assets and liabilities. Finally, we have to find out the balance of this account. Credit total is more. In rough notes, put the credit total first. Minus debit total 4,500. Then the difference amount is 5,500. What is the meaning of this answer? Credit side we wrote profits. Debit side we wrote losses. Profit amount is more. Therefore, answer is profit. In revaluation of assets and liabilities, there is a profit of 5,500. This amount belongs to old partners, A and B. To their capital accounts, we have to transfer this amount in old profit and loss ratio. We said we should show this transfer debit side because debit total is less. 2. First old partner is A capital account. Profit is 5,500 and 3/5 of this profit we should transfer to A's capital. 3/5. 2 B capital. 2/5 of this profit amount 2/5 we should transfer to B. 3,300 for first partner. 2,200 for second partner. Now two sides put the totals. 10,000 rupees. With this, revaluation account is completed. Next come to capital accounts of all the three partners. Capital accounts of A, B and C. In present problem we are not writing journal entries now. Therefore, to prepare capital accounts we use hints. Hints are capital account is a personal account. Personal account rule, debit the receiver, credit the giver. Means if partner is a receiver, if partner is receiving any benefit from the firm, we should debit that amount. In other words, if partner is retiring, the benefits which he has received from the firm, now he should return. So, at the time of retirement, the amounts which partner should return to the firm, we should debit to capital accounts. Credit the giver means if partner is giving any benefit to the firm, we should credit that amount. In other words, suppose partner is retiring. The benefits which he has given to the firm, now firm has to return to partner. So the amounts which firm has to return to partner at the time of his retirement, we should show on credit side of capital accounts. Let us start the capital accounts with opening balance. From where we should take this amount?
In old balance sheet under liability side, capitals of A and B, 60,000 and 40,000 are given now. These two are known as opening balances. These amounts we have to write here.
Credit side we have to write the opening balance. By balance brought down 60,000 rupees and 40,000 rupees. New partner's amount is not given in the old balance sheet now. Therefore, for new partner, don't write any amount. Then come to revaluation profit. In revaluation account, 5,500 profit came. That amount belongs to old partners. If they are retiring, firm has to return that amount to them. So revaluation profit also, credit side we have to show. By revaluation account. In revaluation account we have calculated, in 5,500, A's share is 3,300 and B's share is 2,200. Next come to accumulated profits. In old balance sheet under liability side, we have to observe whether any accumulated profit is given or not.
In question under liability side, he has given journal reserve 20,000, profit and loss account 10,000 rupees. These two are known as accumulated profits. Profit and loss account, if he gives under liability side, then the meaning is there is a credit balance in profit and loss account. It is considered as accumulated profit. Sometimes profit and loss account balance may be given under asset side. Then the meaning is there is a debit balance in profit and loss account. It is known as accumulated loss.
General reserve amount and profit and loss account credit balance. These two amounts belong to old partners. If they are retiring, firm has to pay these amounts to them. So, credit side we have to show these two amounts. First, general reserve. By general reserve account. In old balance sheet liability side, general reserve amount is given as 20,000 rupees. Old profit and loss ratio of A and B is 3:2. 3 by 5 is A's share. 2 by 5 is B's share. So in 20,000 rupees, 3 by 5 belongs to A. 12,000 rupees. From 20,000, if you deduct 12,000, remaining amount is 8,000 rupees. That amount belongs to B. Otherwise, you can calculate here. 20,000 into 2 by 5, 8,000 comes. Now come to profit and loss account credit balance. When old partners are retiring, firm should return that amount to partners. So P&L account credit balance also we should show on credit side of capital accounts. Profit and loss account. Profit and loss account amount is 10,000 rupees. This 10,000 in 3:2 ratio we have to distribute to old partners. You can save time here. Instead of doing the calculation, directly you can write the amount. In 20,000, 3/5 is 12,000 rupees. 10,000 means half of 20,000. So in 10,000, 3/5 means how much? Half of 12,000 rupees. 6,000. Similarly, in 10,000 rupees, 2/5 means half of 8,000. 4,000 rupees. Otherwise, you can do the calculation. Now, all adjustments we have taken. Finally, come to goodwill and capital related points.
A, B. These 2 points are related with capital and goodwill adjustment. A bit. C should bring 60,000 rupees as capital. B bit. Goodwill of the firm valued at 40,000 rupees. In old balance sheet under asset side, goodwill 10,000 rupee is given. So in old balance sheet already goodwill is appearing at 10,000 rupees. And in adjustment, again goodwill amount is given. And once you compare these two amounts, old balance sheet goodwill amount is less than adjustment goodwill amount.
When C is coming as a new partner, he brought only capital. If C brings a capital goodwill both, then we have to adjust that goodwill under premium method. As new partner is bringing only capital amount, we have to adjust the goodwill under revaluation method. In revaluation method, as new partner is not bringing goodwill amount, old partners create the goodwill in the firm. That created goodwill we should transfer to old partners capital accounts in old profit and loss ratio. So related to revaluation method, these two entries we have to pass. Let us see the first entry. Here bank balance is given in the old balance sheet under asset side. Cash balance is not given. So our assumption is C directly deposited capital amount in our bank account. So bank is a receiver and C is a giver. Two accounts are bank account and C account. Bank with the firm's name, if you open any account, it is a personal account. C, partner's name, no, this is also a personal account. Personal account rule. Debit the receiver, credit the giver. Banker is a receiver, debit bank account. C is a giver, credit C's account. When owner's name comes in credit, instead of writing owner's name, we have to write capital word. As this is partnership related problem, we have to prefix partner's name. So the entry is bank account debtor to C capital account. First entry is bank account debtor to C capital account. New partner is bringing 60,000 rupees as capital. So write down that amount. If we adjust the goodwill under premium method, this first method, we used to credit goodwill account also. Because under premium method, new partner brings capital goodwill both. Under revaluation method, as new partner is not bringing goodwill in cash, we should not write goodwill here. Now come to second entry. The new point in this problem is, in old balance sheet under asset side, already goodwill amount is given. In balance sheet, he has given goodwill amount 10,000 rupees. This amount is known as recorded goodwill or book value of goodwill. And in additional information, again goodwill amount is given 40,000 rupees. This amount is known as present value of goodwill. Recorded goodwill, present value of goodwill. When these two amounts are given in the question, we have to pass the journal entry with the difference amount. 40,000 minus 10,000, 30,000 rupees. With 30,000 rupees, we have to write this second entry. And observe one point here, balance sheet goodwill amount is less than additional information goodwill amount. Meaning is, in revaluation of this goodwill, goodwill amount is raised by 30,000 rupees. Comparing to present value of goodwill, its book value is less now, means goodwill amount is understated. Now with the difference amount 30,000 rupees, we have to create goodwill, and that 30,000 rupees we should transfer to old partners capital accounts in old profit and loss ratio. So why goodwill account is debited here? Because with the 30,000 rupees we are creating goodwill account. Goodwill is one asset. Asset shows a debit balance. Therefore goodwill account is debited. And why capital accounts are credited? Capital accounts come under liability. So liability shows a credit balance. To old partners capitals, 30,000 rupees we want to add. So their capitals are increasing now. Capital shows a credit balance and you are increasing now. Therefore again we have to credit capital accounts. So 30,000 rupees In old profit and loss ratio, 3:2, we have to distribute to A and B partners. So 30,000 into 3 by 5, 18,000, we should transfer to A's capital. 30,000 rupees into 2 by 5, 12,000 we should transfer to B's capital. Now, these two entries we have to post in capital accounts. See the first entry, C capital is credited. Therefore, credit side we should post this entry. What to write in particulars column? We debited bank account now. Write down that by bank account. In C's column, 60,000 rupees. Come to second entry, capital accounts are credited. So credit side we have to post this entry. We debited goodwill account. Write down that by goodwill account. In A's column, 18,000 rupees. In B's column, 12,000 rupees. With this, posting is completed. Next step is balancing. Credit side only we have the amounts now. Find out the totals of credit columns. Same amounts appear as balance carried down on debit side. To balance carried down. Put the totals. Now these three amounts appear as capital amounts in new balance sheet under liabilities side. With this, capital accounts of all the three partners are completed. Next, we have to prepare cash account or bank account. Then which account we should prepare? Cash account or bank account?
See the old balance sheet under asset side. Cash at bank is given, means bank balance is given and cash balance is not given. Therefore, we have to prepare bank account in this problem.
Opening balance on debit side we have to write. To balance brought down 25,000 rupees. Why debit side I am showing this opening balance? Because cash at bank is an asset. Asset shows a debit balance. Therefore, debit side we have to show this opening balance. Next, come to these two entries. In first entry, we debited bank account. Therefore, first entry we have to post in this account. Which side? As bank account is debited, on debit side we have to post this entry. What to write in particulars column? We credited C capital account. Write down that. To C capital account, 60,000 rupees. In second entry, bank is not there. So no need to post this entry here. So posting is completed. Next step, balancing. Only debit side we have the amounts now. Put the debit total, 85,000 rupees. Same amount appears as balance carried down. Put the total. In new balance sheet under asset side, as bank balance we have to show this 85,000 rupees. So bank account is also completed. Next come to goodwill account. This is goodwill account. First we have to see in old balance sheet under asset side whether any goodwill amount is already given or not. In present problem, in old balance sheet under asset side goodwill amount is given 10,000 rupees. First that 10,000 rupees we have to take in goodwill account. Which side? Goodwill is an asset, no? Asset shows a debit balance. So on debit side we have to show that amount. To balance brought down 10,000 rupees. First time in goodwill account we are showing balance brought down. Recollect previous videos? In capital accounts, in cash account or bank account, we used to write balance brought down amounts. In goodwill account also we are writing balance brought down in present problem. Why? Because in old balance sheet under asset side already some goodwill amount is there. Next come to posting of these entries. In first entry goodwill account is not there, so no need to post this first entry here. Come to second entry. As goodwill account is debited, on debit side we have to post this entry. What to write in particulars column? To A capital, to B capital. Amounts are 18,000 rupees and 12,000 rupees. Credit side there is no amount. So debit total 40,000 appears as balance carried down on credit side. Put the total. In goodwill account there is a debit balance of 40,000 rupees. Debit total is more, no? Therefore, this balance is known as debit balance. This debit balance of goodwill account appears as an asset in new balance sheet. So remember, under revaluation method of goodwill adjustment, we should show this goodwill amount 40,000 rupees as an asset in new balance sheet under asset side. With this, ledger is completed. In ledger book, we prepared revaluation account, partners capital accounts, bank account, goodwill account. Finally, we have to show the new balance sheet. Balance sheet of all the three partners. Balance sheet of A, B and C as on 31st March 2020. As a new partner's name also we included, this is called new balance sheet.
Based on this old balance sheet and additional information, we have to prepare new balance sheet. Let us start with the liability side. Trade creditors 15,000 rupees. Related to this, there is no additional information. Therefore, in new balance sheet also, same amount we have to show for trade creditors.
Trade creditors 15,000 rupees.
Next, bills payable 30,000 rupees. Related to bills payable, there is no additional information. Therefore, in new balance sheet also show the same amount.
Bills payable 30,000 rupees.
Next, general reserve and profit and loss account. These two amounts we are transferred to old partners capital accounts. Means there is no balance in these two accounts now. Therefore, in new balance sheet, we should not show these two amounts. So, liability side completed. Not only from liabilities, even additional information also once we have to observe whether any extra liability is given or not. There is no extra liability here. Therefore, finally we have to show the capitals of all the three partners. Don't show these amounts 60,000, 40,000. Which amounts we have to show here?
In capital accounts we got answers now. These three amounts we have to write here. Capitals of all the three partners A, B, C. You can show these three amounts in inner column and total in outer column. Otherwise, you can show these three amounts in outer column.
Next, come to buildings 30,000 rupees. In additional information, EBIT, building valued at 40,000 rupees. There is one adjustment related with the buildings.
Buildings. In old balance sheet, building value is given as 30,000 rupees. And the market value of this building is 40,000 rupees. So building value is increased by 10,000. In new balance sheet, we have to show only the market values. How that 40,000 is coming? In inner column, book value, old balance sheet value 30,000 rupees plus appreciation 10,000 rupees. Market value of building 40,000 rupees in outer column.
Next, plant and machinery 50,000 rupees. Related to plant and machinery, CBIT. Plant and machinery to be depreciated by 5%.
Plant and machinery. In old balance sheet, value is given as 50,000 rupees. And market value of this asset is reduced by 5%. So 5% we should deduct. 50,000 rupees in inner column, old balance sheet value minus depreciation. 5% on 50,000 rupees. In revaluation account, we have calculated the amount 2,500. So market value of this asset is 47,500 rupees.
Next, stock 20,000 rupees. Related to stock, there is no additional information. Therefore, in new balance sheet, same value we have to show under asset side.
Stock 20,000 rupees.
Next, debtors 40,000 rupees. Come to adjustment number D. Create a provision for bad debts at the rate of 5% on debtors.
Debtors. In inner column, old balance sheet value 40,000 rupees. On this 40,000, 5% provision for bad debt we have to provide. So provision for bad debt we have to deduct from debtors minus provision for bad debt. 5% on 40,000 we have calculated in revaluation account. 2,000 rupees came. Deduct that amount. So 38,000 rupees.
Next, cash at bank 25,000 rupees. Don't show this amount here. Which amount we have to show?
In bank account, we got balance carried on 85,000 rupees. This amount we have to show here. 85,000 rupees.
So all assets we have completed. Not only from balance sheet, even additional information also once we have to observe whether any extra asset is given or not. There is no extra asset here. Goodwill 10,000. Don't show this amount here. Which amount we have to show?
In Goodwill account, there is a debit balance of 40,000 rupees. That amount appears under asset side. So remember, if Goodwill is adjusted under revaluation method, in Goodwill account there will be some debit balance. That amount appears as an asset in new balance sheet. With this, all assets and liabilities we have taken in new balance sheet. Finally, we have to calculate the totals of two sides. Two sides totals are 2,70,500. So in new balance sheet, liability side and the asset side you should get the same totals. Then only a problem is correct. So this is all about 12th problem from admission of a partner topic. Hope this video is helpful to you. Thank you.